Hello and welcome. In this podcast, Mark will be talking about one of his favourite investments, Greggs, ticker symbol GRG. Now, he's been going on and on about how good they are all week, so I'm in the queue at Greggs' new drive-through bakery in Bolton to see what all the fuss is about. So to discover Mark's investment argument for Greggs and to see what I think of their pasties, stay tuned to this, episode 11 of The Desert Island Investor. Yes, I know the car in front has moved forwards. This episode of the podcast is generously hosted by Progressive Equity Research. Visit their website at progressive-research.com. Mark, you've selected Greggs, ticker symbol GRG, from your portfolio to cover for this episode of the podcast. So, what are your reasons for picking this particular stock?
Yeah, well, what's prompted me to think about and discuss Greggs was that our local store has closed, and I thought this may result in some form of civil unrest. But thankfully, it's only due to a refurbishment. And I must say that 3 separate acquaintances have commented on this. I doubt any of them know that I'm a Greggs shareholder, but perhaps it's due to the fact that this is just newsworthy for a town the size of Darwin. So, they've additionally recently released the results for the half year, so I think this justifies taking a wider look at the group.
Right, so as usual, what are the base numbers for Greggs?
Well, it has a market capitalisation of 2.5 billion, a PE of 20.2 and a yield of 2.4%, and that's based on the current share price of £24.36.
When were they first listed? And when did you invest?
Well, they first listed back in 1984. That was the year that I started investing, and I wish I'd had the foresight back then to jump aboard. I invested in April 2017 at £10.24, and more recently, September of last year, September 22, at £18. But prior to that, I've paid north of this in December 2019 at £20.89. So, with the share price standing at £24.36, this looks pretty respectable. But I do have an admission to make. I paid just £3.07 in August 2003 and sold in November 2005 for £4.60. Now, this was a nice little return. But, if I'd just sat on those shares, I would have been in for an 8-bagger. So for those that remember Bullseye, when contestants didn't win the star prize, the punchline was always, that's the gamble. However, we've got to remember that, not making money is not the same as, having lost money. But, nevertheless, my style has changed over these 2 decades. And I've taken examples like this as a further reason to, stay the course and interfere with the portfolio as little as possible.
Now, I found you to be very philosophical about your investments, especially those where you find yourself underwater. But I would say that in both incarnations, you've actually made money, and I'd take much comfort from that. I believe this is one of your core holdings now.
Yeah, this is second in my portfolio, and I'm happy with its place and its weighting, which is currently around 8%.
So from a point of view of competition, we always ask about a moat. Where is the moat for Greggs?
Well, I thought I'd throw this one back at you, Paul. At the end of the day, it sells, savouries, sandwiches, pizza, cakes, drinks, etc. And these are not difficult to produce. When I was a lad, growing up in Darwin, there was an abundance of independent bakers and confectioners, and these have largely melted away. And I think it's partly because there's a lot of choice in the realm of fast food, both in terms of brands such as McDonald's, Subway, Burger King, Domino's, KFC. But there's a lot of independent providers for things like pizza and kebabs, spicy chicken, etc. And then also supermarkets. We discussed Tesco recently, and that's increasingly encroaching on this territory. And also for, a typical husband and wife, running a small independent bakery, it's not a popular lifestyle. I know of one very successful business that upon her retirement, nobody wanted to take it on due to the unsocial hours and how tiny it was. So Greg started as an independent single store in Gosforth, and today it's a Goliath, So, you're the marketing man. What's the secret of how they promote themselves?
I think this is a very straightforward supply and demand. It's quite clear that we now have a habit, good or bad, of wanting convenience when it comes to food. I think that these quick fix bakeries like Greg's have really just capitalized on that. And I think location is the key in many respects. They've placed their stores strategically in areas where there are a lot of businesses. So people can go down there in their lunch break, and they place their stores in train stations and town centres, so that they put themselves in a position where they're easily accessible, and their customer base want ease of access to food.
Mm. Well, in addition to Greg's, promoting themselves, there appears no end of people prepared to do this on their behalf. If you have a look on YouTube, there's a raft of videos where people, comment or review on Greg's. And interesting, these include a lot of Americans leaving their take on Greg's and discovering them. But also you'll find celebrities such as Ryan Gosling and Piers Morgan and Susanna Reid, Alison Hammond, Vicky McClure and Kenneth Branagh on the Graham Norton show. I saw that the former Chancellor on George Osborne had a select committee, and even a certain Boris Johnson talking about Greg's, whatever became of him. So I suppose, that makes your marketing job easier, Paul, in stretching the budget if you've got people, marketing the business for you.
Yeah, absolutely. I mean, this is excellent, PR, really. And it's like they say, there's no such thing as bad news if people are talking about your product, and especially if they're not actually slating it. I don't know. I haven't seen the video with Ryan Gosling discussing the whatever it was he was eating. Do you know what he was eating?
I think it was the sausage roll.
Sausage roll. Okay. I'm not saying people to go down the shops and say, I'm going to be like Ryan Gosling today, but I'm going to have a sausage roll. But yeah, it does help the cause. And they've done an excellent job of getting those people, to push their product.
Mm. Now, Greg's appear, I won't say self-deprecating, but they can poke fun at themselves in their marketing. And, I think that can be a marketing gamble. Many people still remember a speech that Gerald Ratner, the CEO of Ratner's Jewelry Trim, made back, as far back as 1991. And during that speech, he commented, we also do cut glass sherry decanters, complete with 6 glasses on a silver-plated tray that your butler can serve your drinks on, all for £4.95. People say, how can you sell this for such a low price? I say, because it's total crap. Yeah. And, no wonder it stays with us. And he later also went on to comment about a set of earrings that was, and these are cheaper than a prawn sandwich from Marks and Spencer's. But I have to say the sandwich will probably last longer than the earrings. I think he got a laugh at the time on that one, but it certainly backfired. Now, I'm not directly comparing a business like Greg's, which coincidentally does sell prawn sandwiches, to that of a jeweller. But my point being is the reputation can take years to build up and seconds to destroy, Paul.
Absolutely. Yes. I mean, you have to be very careful. There's a very fine line between trying to be funny and succeeding in being funny and poking fun at yourself, which causes, either offence or you create something that's inappropriate.
Yeah. I think a lot of it's done through social media. I think they did a sausage roll in an iPhone box or something like that to
really?
Promote it. Yeah.
Wow.
Or something akin to that.
You've got to kind of inject some kind of variance into the way that you promote it, because otherwise you can't just keep telling everyone how great they are. So, the people, particularly the younger generation, will latch on more positively to things that are creative. I don't know what the demographic is of their customer base, whether it is, predominantly young people
or people like us.
Well, it would, yeah, it definitely wouldn't be people like me. I get indigestion too badly from eating that kind of stuff. But
okay, well, I'd like to compare Greggs to another successful but different company, J.D. Wetherspoon, often warmly referred to as Spoons. Now, they both have an economical offering, a strong, recognisable brand. People seem to know what they're getting, and they can recognise key locations for their state. They've got extended hours that really sweat the assets and targets a wider customer base. And and they're both sometimes businesses that people can be a little bit snobbish about. Now, the store that I mentioned in Darwin, it's been there certainly as long as 45 years that I can remember, and possibly longer, and has operated on the same site. And back in those days when it was there, the halcyon days of small. Let's describe Darwin as a small market town. We had a Woolworths. Remember them? We had a Burton's that became a Greenwoods, a Mothercare, a Freeman, Hardy and Willis, and a Lumpolly, and all these recognised brands. They've all disappeared over that time. Now, you've been doing a sterling job as an unpaid ambassador for the Bolton Tourist Board in past episodes, Paul, and I've had a look on the Greggs website, and there are 21 outlets within a 7.6 mile radius of Bolton Town Hall. And perhaps giving you a bit of a false choice, Paul, but it's 9 o'clock on a Saturday morning, your stomach's rumbling. Is it a Greggs Barm and a coffee, a bacon barm and a coffee, or a Wetherspoons full English and a pint?
My personal choice would be a Wetherspoons full English and a pint, which goes surprisingly well together. I have to say, I didn't think it would, but I have done some legwork in connection with this episode. So I headed off to Greggs to check it out, because as a student, I do recall buying cheese and onion pasties quite a lot, which I thought were lovely. And I couldn't remember whether they were made by Greenhalgh's, which is a local bakery in Bolton, or Greggs. So I went out to Greenhalgh's and bought one of their cheese pasties. It is now. That's a conventional shaped thing. Then drove to the new drive-through Greggs, which is opened in Bolton.
Not a sail-through on the rafter drive-through, was it?
Yeah, no, it is. It is just a drive-through. I bought their cheese and onion bake, as they call it.
Right.
And it was quite funny because we're in the queue. There's a couple of cars in front of us, and a friend who's with me was sitting in the passenger seat with the Greenhalgh's pasty on her lap. Mm. And when we got to the window, she said, "Can you just ask them if they could put the Greenhalgh's pasty in the microwave and warm it up a bit?" So that,
talk about tact. Well, a couple of things there. Talk about tact, but you really know how to show a girl a good time, don't you?
Oh yeah. So that was quite amusing. But so then we just sat in the car park and tried them both, and the Greggs one was very good. It was nice. It was like it actually had onion in it, whereas the other one didn't. But right. I like them both.
Yeah, I wonder why they were covered in breadcrumbs or pastry crumbs.
Yeah, I have actually got a bit of indigestion now. That was far too much for me. But you've got to have, I dare say, a lot of people got stronger constitution. But the thing about it that struck me was just the price. It isn't cheap.
Yeah,
the Greggs bake was cheaper than the Greenhalgh's pasty by about 70 pence.
Right. So what was? Can you remember what the actual prices were?
It was about. I think it was just about £2.15. I think for the Greggs
right.
Bake. But I mean, if you add a coffee to that, which I think is also about £2. I mean, if you're going down, if you have a lunch break and you're walking down to Greggs every day to get a pasty and a coffee or something, I mean, you're not coming away with any change from a fiver. Mm. So if you've got if you're concerned about the cost of living crisis, then that's probably something that you should not do. But people still do it, and an increasing number of people are doing it. So from an investor's point of view, this is good news. As they say, there's good money to be made out of a bad habit.
Ooh, I like that. Yeah, so just reassuringly, in that same radius for the 21 Greggs outlets, and I think that was a new one as well, wasn't it? That drive-through.
Yeah, it's only just open. Yeah.
Yeah. Okay, so they just cut the ribbon on that one. But in that same radius, there's be reassured, Paul, there's 6 Wetherspoons over that same area. Now, I've got to admit, for me, I'm a very rare patron of Greggs. It's more from a bakery chain to more like food on the go business that they don't sell bread. greenhouses actually do very, very good bread.
Yes, they do. They do good bread.
Yeah, they do a good like multigrain and sourdough. It is, and it's more expensive, but it's worth paying for. But I suppose what we've talked about. Given my lifestyle, I'm very seldom what you could call time poor, and I have to grab something. I've got the readily available resources of a kitchen. And additionally, you don't maintain an athletic physique like this, Paul, through eating fast food. So just expand on this a little bit. We're both men of a certain age and brought up in a culture of making our own sandwich or preparing a packed lunch for work rather than paying a premium for somebody else to perform this really simple task for us. But I think I might have said this before. I think it's valuable for investors, not just to look at the world through their own eyes. And in this example, lots of people are willing to purchase ready-to-eat food, or exactly as the brand says, prêt-à-manger, and see this as an everyday expense and not necessarily as an indulgence like we might. So again, from a marketing perspective, how important is it, to part your own, shall we say, credo, when promoting a product?
Yeah, you have to look at what's involved here as a business. I mean, their business is selling food to people who want to walk into a shop and buy it and walk out. I don't follow any social media accounts that might be critical of I call quick fix bakeries and their pricing. But you've shown me a photograph recently of the Greggs in London at the train station, and although the one I went to today, the drive-through wasn't that busy, I have seen them absolutely packed to the gills. So, as you say, I mean, we would, if you made a sandwich and took a flask of coffee, it'd be a fraction of the price of buying anything from Greggs for lunch. But it doesn't stop people from doing it. And like I say, from an investor's point of view, that's what you've got to look at. There are lots of campaigns, for trying to reduce child obesity, and I'm pretty certain that they would be up in arms about the idea of people eating too many pasties. But if the business model is been set up so that it succeeds in attracting those customers, then it is what it is at the end of the day. I mean, in Bolton, we have a thing called a pasty balm, which is basically a balm cake with a pasty in it.
You're a weird lot, aren't you, in Bolton?
Yeah, and they are quite popular. So I'm pretty certain that a lot of Boltonians see the pasty as quite important. It's not something they give up too easily, really. And
there's a well-known independent shop, isn't it? Is it called Ye Old Pasty Shoppy or something? Is it?
Yeah, the town centre has Ye Olde Pasty Shoppy, and again, they're a small independent bakers, and they produce some very nice stuff in there. And of course, we have Cars, which is the big Bolton pasty peddler.
Right.
Again, what I mentioned earlier about location of stores is quite important. They have a site on Manchester Road, which is very close to an industrial area, and it's permanently full of people wearing blue overalls spending a fiver. On a drink and something in a paper bag. I'm not quite sure what it would be, sausage roll, pasties or whatever. So they're very successful as well.
Yeah, I mean, obviously Bolton is some kind of epicenter for pies and pasties. I mean, what's your blood group, Paul? Cheese and kidney?
I think I sent you a link about the Greggs drive-through opening up, and there were some rather unkind comments made by people again on that news item about it being something that's for lazy people. But I mean, again, from what we're talking about from an investor's point of view, if loads of lazy people are going buying pasties and the company's making a load of money, then that's a good thing.
Yeah.
So Greggs is a mature business, as you've indicated, and the valuation looks a little more stretched compared to other businesses that we've covered. Where do you envisage future growth coming from?
Well, turning to those interim results, it's like an unrelenting juggernaut. Sales were up 21.5%, with like-for-like sales up 16%. They had 94 new shops, 33 of these were franchises, and 44 closures, and expect 150 net new shops in 2023. So that will be a more active second half. Now, the group has had a total of 2,378 shops as at the 1st of July 2023. Just as they've previously targeted, the breakfast market, they're now focusing on the other fringe of the day, the evening. And this is their fastest growing day part at 8.3% versus 6.5% in 2022. That's in the company managed shops. So you've got the additional cost of the labour and the product that you sell, be that a pasty or a donut. But in terms of premises, etc., these costs are fixed. So making those assets work longer really does help the bottom line. They've also expanded the range to encompass an evening diet to include items such as pizza. And they are increasingly trading through digital channels and deliveries, and participation in the Greggs app has doubled from 5.2% to 10.6% of the transactions. And deliveries are made from 1,300 of the shops, and this accounts for 5% of the business. And they're also trialing with a second aggregator besides Just Eat. Now, they've continued to tap into the growing vegan and health-conscious market. I think through the conversation we just had, it's important to start, looking at this side of the business, and they're adept at adapting their offering. So the growth is coming from several avenues, and you can even purchase Greggs frozen sausage rolls at Iceland.
So you mentioned franchises. What proportion of their offering is through franchised outlets?
Well, of those 2,378 shops, 466 are franchises, which is a touch under 20%, and they've got a total of 16 franchise partners.
The number of store closures seems quite a high proportion.
Yeah, I do think one of Greggs' major strengths is how it manages its estate. It's agile and nimble and can adapt to a changing footfall pattern. Now, town centres are constantly evolving. Now, firstly, I doubt for most people that a visit to Greggs is the primary reason for being in that location. It's not a destination purchase. They happen to be in the area or passing or conducting some other activity. It's secondary. Now town centres are constantly changing. You've got parking restrictions, the closure of a nearby major store like Debenhams or a bank, a new layout. All these factors can affect the foot traffic around a town centre. Now, I used to deal with a foreign exchange company, and when they were looking to open a new branch in a town, they would deploy a team in various areas with handheld clickers, counting pedestrians and evaluating where the prime location would be. So it's something of a science, and Greggs can quickly relocate to a more advantageous location for either footfall, suitability, or more favourable rent. And I'm sure that as other retailers flounder, then this creates opportunities, not least in better lease agreements.
Yeah, and as previously mentioned, their footprint isn't restricted to the high street either. No, you've got retail parks, railway stations, roadsides, and within the supermarkets, they're covering it. They're in Tesco, Asda, and Sainsbury's, and also underground stations. There's a new shop at Canary Wharf, and airports too, with Glasgow, Cardiff, and Gatwick, which has a 24-hour operation. Now, you've mentioned previously that you like net cash, and that is the case with Greggs.
Yes, at the half year, it had 138.6 million in cash. And now we said during the Tesco podcast, one of the merits of retail is that, you're generally paid somewhat quicker than what you pay your suppliers. So with the capital expenditure across the group, managing the estate and bringing on more manufacturing capacity and additional distribution centres, this can be self-funded rather than, taking on debt, and this is one less aspect to worry about.
So returning to the estate and your recent news in Darwin, there is also a significant refurbishment plan to prevent the shops looking tired, I believe.
Yeah, in the first half, they refurbished 71 shops, and they expect to complete around 140 refurbishments, 125 company managed and 15 franchised in 2023. And in 2022, there was 86 refurbishments. Now, an interesting figure is that a new shop costs around £370,000 to equip, whereas a refurbishment comes in at £135,000.
So this is still a growing business. Are you fearful that we will soon be nearing peak capacity?
Well, Greggs' ambition is to have significantly more than 3,000 shops. Now, that significantly more is rather nebulous and open to interpretation, but it does still present, plenty of headroom. And as well as increasing the number of shops, there is the scope in increasing the revenue per shop. They've previously alluded to the possibility of looking, outside of the UK. Back in 2008, they did withdraw from Belgium, where they had just 10 shops, but this was in the day when it was just a bakery offering. So, it may be a concept that may not take off, but, I would suggest that, testing the water to see how a Greggs is received, need not involve, major capital commitment, and they could, again, quickly make a tactical withdrawal, should it not work.
You've mentioned growth and turnover, but I know you like to focus on profit, so let's not forget that. What was that at the half?
Well, as the saying goes, turnover is vanity and profit is sanity and cash is king. Again, this is for the half year. The profit before tax was 80 million, but this included an exceptional 16.3 million related to a settlement of a COVID business interruption insurance claim. So if we strip that away, that brings in 63.7 million versus 55.8 million. And not forgetting that dividend, that was increased from 15 pence to 16 pence.
Right. Well, all in all, you've described a pretty well-oiled machine. Do you foresee any potential threats on the horizon?
Well, you generally think of a new competitor emerging, to, if I can say, eat their lunch. But, there's no absence of competition already. And the company, continues to thrive. Ahead of this episode, I was having a conversation with Gareth Evans, who's the managing director of Progressive Equity Research, and I mentioned that we will be covering Greggs next. And I had many contacts within the investing world, and I'm appreciative of the information that they collectively send me. And this is often involving stocks that they know I'm invested in. With Greggs, it's generally a common theme that people send across to me, and this consists of a photo outside of a random shop anywhere in the country. But the specific point, it's not necessarily the shop, but the queue that's outside of Greggs. And Gareth was that one that you mentioned early on that I sent you, the shop at London Bridge. And, it's that familiar queue that's snaking outside. It's very evident at motorway services. You'll see a considerable queue, at the Greggs, in stark contrast to one of their, competitors, next door but one. So, not only have they got a strong product offering, but I also would suggest, they've got an economic price structure that, others would struggle to compete against. Occasionally results are affected by, extreme conditions, in the climate, be that, bad weather that keeps people indoors or hot weather that stifles the appetite for warm savouries, but, these are all blips, and, I won't say they interfere too much with the long-term trend. Then, on management, last year, the CEO, Roger Whiteside, retired after 9 years and was replaced by Roisin Curry. She's been with the group since, 2010. But, outwardly, there's been no change in direction, and it's a case of, as you were. And Greggs have even had to overcome the so-called pasty tax. Don't know if you remember that. Back in 2012, this was where most food bought to eat or cook at home is zero rated for VAT. Whereas meals bought in pubs or restaurants or hot takeaway food is charged at the standard rate of tax. Well, sausage rolls and pasties fell into this nebulous area of whether the products are baked for sale or sold while still hot. And then in more recent times, with higher energy costs, this was a consideration for Greggs given their reliance on ovens. So, and I'm sure Greggs will continue to face challenges, as it's done in the past, but, I'm confident that it will overcome them. With a PE of 20.2, there's an expectation of significant growth to come. But, I'm sure that Greggs, just like the Mississippi, will, just keep rolling on, Paul.
Right. Excellent. Well, so all in all, very positive review of Greggs. And we will move from this then swiftly on into our regular spot, which is a question in a bottle. Let's see what's in the bottle today. Right, so the question this time is from Jonathan Murphy. And Jonathan asks, Mark, are you influenced by directors buying shares or selling their shares?
Right, well, Johnny, thanks for your question and thanks for your support. You've been with us from the start. So Johnny is somebody who's well known to me, and he's a very dear personal friend. He's still in his 20s, and unlike me, he's towards the beginning of his investing journey. Now, Johnny often asks me for my thoughts on a subject, but I'm pleased to say that he's sufficiently independent of thought to come up with his own conclusions and decisions. But it's not just a one-way relationship, it's a two-way street, and Johnny is a leading salesman for a company called R&J Building Supplies, or a national distributor. So I gain valuable insight into the activity of this part of the economy and the impact it has on other businesses that feed off it. And also, through Johnny and other people of his generation, I feel that I also gain an insight into a younger person's perspective. As I'm becoming older, I'm conscious of the threat, and hopefully it's just a threat, of becoming detached or too detached from an ever-evolving world and knowing what's relevant. Now, when I was younger, I didn't think the older generation had a monopoly on knowledge, and now that I'm older myself, I'm still of that opinion. So I do take interest in director dealings and indeed PDMR, which is persons discharging managerial responsibility. But for me, it's the director buys that are more noteworthy than the sales. Sales could be motivated for any number of reasons. It could be that bad news is coming down the track, but also, it could be for a tax liability, a move to a new home, a villa in Spain, boat, a divorce, the well-documented bank of mum and dad, or even an apartment for the mistress. So, in the whole, I would suggest that directors purchase shares because they expect them to rise. Now, although I do like to see a high share ownership across the board, this is in itself not a guarantee of success. Also, I'm sympathetic to the argument that having your job and your net wealth all tied up in the same business could be dangerous if things go sour. Now, director buys, despite being encouraging, as I've just said, they're not a guarantee, certainly in the short term. And that's despite the fact that, you'd expect them to have a greater understanding and visibility of the business than most. So, as an example of this, and to make it relevant, I thought we'd take a look at my own portfolio and a stock that we covered a couple of episodes ago, and that's Strix, ticker symbol KETL. And, interestingly, going back not too far in the past, there were some director buys. If we go look at the 28th of October 2021, Mark Kirkland, who's one of the non-execs, he purchased 8,710 shares at £2.87. Then on the 5th of April 2022, at a price of £1.99, Mark Bartlett, who's the CEO, he purchased 134,249 shares. Roudus Wong, the CFO, purchased 22,200 shares. And Gary Lamb, who is the chair, purchased 44,400 shares. Also, Richard Sells, another non-executive, he purchased 9,894 shares at £2.02. Then, later that month, on the 27th of April 2022, Mark Kirkland purchased a further 11,425 shares at £2.1758. So that's all looking, pretty good. All the directors, the two executives and the three non-execs have purchased, you could argue that a good quantity of shares there. But If we look as recently as November 22, not that long after they purchased these shares, following a trading update, or you could call it a profit warning, and the news of an acquisition, the Strix shares were trading at just 77 pence. So, director buys can be a valuable guide, but this has to be judged within a collective basket of lots of other criteria and not just on its own.
Well, that's all for this episode. We hope that you enjoyed it. Please remember the content is for information only and it is not financial advice. If you would like to pop a question into a bottle for Mark, just post your question in the comments and hopefully it'll reach the island in time for the next episode. Thanks again for listening. See you next time.